The boogeyman strikes again. Jerome Powell sells off the U.S. stock market in a speech at Jackson Hole. We're going to get into some key takeaways from that speech today, what actually happened. Then we're going to go over some technical analysis on the S&P 500. So stick around. This is going to be a good video. So why the sell-off? So why did Jerome III sell the market off with his comments at the Jackson Hole speech in Wyoming? Well, it's really important to consider the political climate of the last two Fed meetings, right? The Fed has been raising interest rates at 75 basis points each time. Now in July, when he raised 75 basis points, he was a bit dovish. Investors were expecting him to be getting closer to announcing that the Fed is close to the neutral rate. Now, this speech, and I want to listen to it right now, was totally different from what investors were actually expecting.
Restoring price stability will take some time and requires using our tools forcefully to bring demand and supply into better balance. Reducing inflation is likely to require a sustained period of below-trend growth. Moreover, there will very likely be some softening of labor market conditions. While higher interest rates, slower growth, and softer labor market conditions will bring down inflation, they will also bring some pain to households and businesses.
Boom. So there you go. The central bank is likely to keep raising interest rates to stamp out inflation. So we haven't reached a neutral rate yet, right? So that's why assets started to sell off when he started to say that. Now, this is obviously from earlier. As you can see here, the market sold off another 80 points. So let's dive further into this speech.
These are the unfortunate costs of reducing inflation, but a failure to restore price stability would mean far greater pain. The U.S. economy is clearly slowing from the historically high growth rates of 2021, which reflected the reopening of the economy following the pandemic recession. While the latest economic data have been mixed, in my view, our economy continues to show strong underlying momentum. The labor market is particularly strong, but it is clearly out of balance, with demand for workers substantially exceeding the supply of available workers.
So that's the crazy part about this recession. When financial tightening happens, right? When the Fed starts to raise interest rates, what they want is a reduction in the labor force, right? They're trying to slow down an overheated economy from when the COVID boom happened after the economy reopened. But instead, what's happening is you're getting record inflation with a labor market that still has a ton of jobs available. I believe it's 1.8 jobs for every person right now in the United States. And that is a hard stat to look at when you're trying to slow down an economy that has rampant inflation. So investors clearly not getting what they wanted from this speech today, and as a reaction, the market sells off 100 points. Now let's hop into the charts and look at some technical analysis on the S&P. All right, so hopping into the daily chart in the S&P 500, this daily candle is just absolutely disgusting, right? This news event erased 4 days of prior trading. Now, the market doesn't just run off technical analysis, right? There are fundamental events, there are news events that could just absolutely demolish trade. So if you are trading around the time these events kick off, you can be in for a lot of pain, all right? Now let's look at the 5-minute chart and see when this actually kicked off, right? So here we are at 10 o'clock and the news algos hit and just absolutely sell the market off on the 5-minute chart, right? Then we get an insane bullish engulfing candle that erases that bearish engulfing candle, right? And as he gets into a bit more of the hawkish speech, the real sell-off continues. So it's always important to be cognizant of market news events that could really affect trading. The open was extremely choppy, and anybody trading this opening range before this, these news algos kicked off would have just absolutely got crushed. What are we looking at on the daily? One thing I don't like about where we are for the S&P 500 is where we are in this chop zone, this trading range that we've been in for 8 days here, for about 7 days here. The market seems to just be gravitating towards it, and the trading inside of this range is really bad. So if you are day trading these in this range, you need to be very careful, all right? What we can look for is we want the market to kind of hold that 40-80 area, or we want to lose it, right? If we're going to be trading short, we want to lose that 40-80 area, okay? And then eventually lose the 4,000 area. We want to get out of this consolidation zone, because if we can get into a trend, or if we can get back into an uptrend, which is where I thought we were going, right? We had a nice solid up move. We had a nice bounce off of this breakout retest, but this news event today has just created an absolutely bearish engulfing candle, right? So I think we're going to have to look to see if Monday we gap down. We're also going to have to look to see how this market closes today, right? Will 40-80 hold Will we break below it? Will we close near it? I think if we gap down on Monday, we could be looking at some more downside continuation. Guys, my name's Ryan. This is Scalpology. If you found value in this video, please consider subscribing, hit that like button, and turn the bell notification on so that you can stay tuned for future videos. We go over everything, stock market analysis, news, trades, everything on this channel. So I will see you on the next one.